So the big question is this: how are real estate investors who don't have a ton of free time, don't have access to off-market deals, and didn't start life on third base, how do we grow a real estate business conservatively to support our families, finally leave the corporate rat race, and build a legacy? That is the question, and this podcast will give you the answers. I'm Ed Matthews, and this is Real Estate Underground.
This is the Real Estate Underground podcast show number 61. Hey everybody, greetings and salutations. This is Ed Matthews with the Real Estate Underground. I am really excited. I found a kindred spirit, a fellow procurement geek, and he's also in real estate. I'm joined today by Melvin Landry, and he is the president of More-Land Equity Capital. And he and his wife have been investing in real estate since the mid 2005. And so let's get into it. So Melvin, welcome to the show. Thank you so much for your time today. It's a pleasure to meet you.
To be here. Yeah.
Anytime I get to meet a fellow procurement professional is a good day in my world, because there aren't a lot of us out there, right?
Yeah, I know.
Yeah. So quick background. So when I was in corporate America, I worked for a whole bunch of technology companies that most of you have never heard of. And it turns out, so did Melvin. And so between the two of us, we've implemented a whole bunch of procure to pay systems out throughout the world. And I think Melvin is more of an implementer than I was, which means he's smarter than me. But other than that, man, it's good to meet a fellow procurement professional and a fellow real estate professional. So thank you. Welcome.
Yeah, indeed. Thanks, man. I appreciate it. Glad to be here.
So Melvin, for those of us who aren't familiar with your company, why don't you tell us a little bit about who you are and what you do for a living?
Yeah, so Melvin Landry. I am a native of South Louisiana. I reside in Pittsburgh, Pennsylvania, and I'm the president and founder, along with my wife, More-Land Equity Capital. It's a multifamily real estate investment organization, and our specialty is A, B, and C class properties, particularly in the Midwest, as well as Texas, Florida, and Arizona. So,
wow, awesome.
Yeah.
So you do a lot of traveling and managing of properties all throughout the country. I'm curious, do you manage yourself, or do you hire professional property managers?
Yeah, so on the single family front, we have a property manager that's in place. I'm a part of a team as well from a syndication standpoint on the multifamily segment.
Excellent.
Of thing. Yep. So it really kind of took the foal out the gates in early 2022 from a multifamily standpoint. And right now we're involved in 6 deals, 5 of them passively, 1 where we're co-GPs, and we're looking to double up in 2023.
Excellent.
Yeah.
So I'm just curious, how many units are we talking about with those deals?
Yep. So our co-GP opportunity is 48 units. That's located in San Antonio, Texas.
Okay.
And 2,150 doors from an LP standpoint. So primarily Texas, Ohio, as well as Florida. You,
sir, are not messing around. That's awesome.
We're sprinting, and I'm a former track guy, so just trying to maintain on the track. So yeah.
Yeah, awesome. Well, I was a pitcher, so I never ran very much, especially not sprinting. I avoided sprinting at all costs. It was punishment for me, not happiness.
All good. Yeah, it's kind of second nature. I did cross country, and I was a half mile way back when. So yeah.
Wow, that's awesome. So you mentioned single family and multifamily. So let's unpack that a little bit.
Yeah.
So with regard to the single family, is that where you started in the business? Or okay.
Absolutely.
All right, so tell me about that. So how did you get into that business, and what was your strategy there? We'll move on.
Kind of ironic situation. So a couple of my buddies were actually living in Western PA. They were teaching at the local universities.
Yep.
I used to always come up and visit my guys, right, and hang out with my buddies, fraternity brothers, and they had a few rentals. So after I kind of saw the model and saw what they were doing just doing it passively. One had 2 or 3 rentals, but it just had it just to kind of have, I guess. So
right.
I kind of saw the model, and I started buying REOs.
Okay.
Targeting REOs.
Good time to do it back in 2005.
Yes, and opportunity zones at that. So I was buying them cash, and it got to be like a drug. So I was buying, it got to the point where every other month I was buying an REO.
Yeah.
I came up to Western PA and kind of put a power team in order. I had a realtor I was dealing with.
Yeah.
had my private money broker if I wanted to do fix and flips, and we did a few of those.
Yeah.
I had a few contracting crews and started building relationships. So I would come to Western PA almost once a quarter.
Okay.
And kind of saw the opportunity and was kind of building it.
Yeah.
And one thing I know from my standpoint was, hey, people need places to stay, even in opportunity zones that may be considered, not your top line areas, and that's okay.
That's okay.
So
Maslow's pyramid of human needs, right? Shelter is
right. And I was just thinking about cash flow, right? Cash flow wasn't and I know cap rates were superior because I was buying them so cheap with cash.
Yeah.
So just kind of gobble up as much as I can, managed as much as I could, and just kind of got to a holding pattern of pretty close to 160 rentals.
Wow.
So what I didn't do was I still kept working. I still kind of maintained and, was half property management. I was kind of half timing it. I was fielding some of the calls as well.
Right.
I was kind of interviewing my tenant base and kind of realized at that point, maybe, well, it was a lot of work, but it was fun.
Right.
I enjoyed it. I would rent to one lady with sister. I would have her as a rental, the aunt, and it was almost like a family affair. So it was, it was pretty cool. Built a lot of relationships, and again, the cash flow was going pretty darn good. So while I was still working, by the way, so I was doing a lot. Yeah.
And so you eventually made the transition into multifamily. So what kind of pushed you into multifamily?
Light bulb went off early 2022.
Yep.
And things changed for me in terms of proximity ecosystem. I joined the ecosystem.
Yep.
And kind of saw the opportunity. I was like, whoa.
Yeah.
I wish I would have done this 10 years ago, right? So, hey, better late than never, right? So
there's never a wrong time to start.
Yeah. So saw the opportunities. My single family business was kind of like a well-running machine. So was maintaining, cash flowing, but wasn't putting extra emphasis on it. I was like, okay, I need to be all in on multifamily.
Right.
And something else I may not have told you as well. I'm a college professor. So economy is a scale. So
right.
Yeah. Term's been with me. Term's been with me since since high school days, right? And time to put it to use here and kind of ramp to reach financial freedom. I'm trying to get there here. Really fast, so.
It's amazing the things that I wish I had come to the conclusion that multifamily was the way to go earlier in my career as well. I mean, I spent 7-8 years flipping and buying small multis, and one of the things that I finally realized was that the fact that if somebody moves out of a 48 unit building, right? Yeah, it's unfortunate. It hurts your cash flow a little bit, but it doesn't put you in financial jeopardy. That same human being moves out of a 3-family, you got a problem, right?
Or a single family, and you're really looking crazy.
And you really got a problem. And so, I understood, and the thing is, I understood financially the value of a single family in that, because, when folks move into a house, they live there for a long time, right? Usually in terms of ownership, it's, on average a little bit better than 7 years. I imagine renters are at least that long, right? They establish family roots there. It becomes their home. And and then you jump up to 6-family plus or 5-family plus, and folks there, are staying anywhere from 18 months to a few years, and then they're moving on to buy their own houses or rent their own houses, right? But it's that in between, that duplex to fourplex, that was a little bit difficult to manage in terms of vacancy, because you lose, 4-family, you're fine on 3, but a duplex or a triplex, you lose a tenant, and it gets tight quick, right?
Yeah, it matters on the debt stack too, right? I mean,
right.
You got a considerable amount of debt. I mean, that
absolutely
come out of pocket. So
so like you, I mean, what I did was I got rid of all of our smaller multifamily and pushed into, in our case, we're searching for 10 units and above here in Connecticut, but economies of scale is everything, right? It's one roof, it's, one HVAC system, maybe multiple boilers, that's fine. But, managing a 40 unit building isn't any harder than managing a 6-unit building, right? It's the exact same process. You're just dealing with more human beings. That's it.
More human beings.
Right.
Yep.
Yeah. So let me ask you about, real estate in general, right? Yeah. So, you're a college professor and you're a technologist, and I'm sure there are a lot of other hats that you wear, and you're obviously really smart because you're a procurement guy, so we're all smart, right? But but what about what about real estate as an asset class? Like, what drew you to real estate as opposed to any other asset class? Stocks, bonds, whatever, art, whatever. What was it about real estate that kind of hooked you?
Stabilization.
Yeah. Okay.
With regards to stocks, right? I'm very small in stocks, but I am in it.
Me too.
Diversification is key for me.
Yeah.
And also, by the way, I got an 8-year-old, right? So I'm trying to teach him, like, hey, man, this is the stuff you're utilizing.
Right.
Start to invest in it, right? So you can kind of see and reap the returns, right?
Compounding interest is a real thing, and it's beautiful.
Yeah, it is a real thing. So, man, but there's not much. How can I put this from a stock standpoint? Company goes out of business tomorrow, wipes out my shares and the amount that I earned. I don't have any control about that. So,
right.
With real estate, right, you have a little bit more control, right? And you have a little more aspirations from a decision-making standpoint to kind of help influence.
Yep.
But it's a tangible asset, which is key, known to appreciate, right? Regardless of situational segment, it typically appreciates from that standpoint. And stocks is a little more risky in that regard. So,
yeah, especially the last few years, right? I mean, the market's up 20% and then it's down 19%, and then it's up 26% and then it's down 20%. It's like, get me off this roller coaster, right?
It's like a whirlwind on a roller coaster at an amusement park. So
right.
Either you love them or you hate them, right?
Yeah, exactly.
Yeah, from that standpoint. So tangible asset, stability is key, and real estate's done well for me. I mean,
clearly,
it's a blessing. I mean, given what I've been through, even as a entrepreneur doing other things as well, real estate, believe it or not, has come to save the day, which is pretty cool.
Yeah, very cool. And the other thing is, you take $1 and you go invest it in, I don't know, GE, and you hope the CEO's having a good day, right? And if he or she is, great. But if they're not, it's not that great. And so, with real estate, like you were saying, it's a tangible asset. You can actually affect the value of it by forcing appreciation, right? You can upgrade units, you can paint the common areas, you can upgrade you can replace the roof, you can do things that will transition, someone from just living in a place to being proud of living there and wanting to live there longer, right? And, the other part of it is you invest $1 in GE, you can buy $1 worth of stock. You invest $1 in real estate, you can buy $4 or more worth of real estate, market, right? That's a beautiful leverage is a beautiful thing. So, so I'm sure in your travels, I mean, you've been doing this for a long time, like me, and I'm curious about folks that you come across that are like, man, I wish I could get into I have so many people in my world that are like, oh, I'd love to do what you do for a living, and my answer is always, or my question is always, well, what's stopping you? Do it, go. So I'm curious in your experience, what got you to move forward, and kept you out of the dreamer's world where it was like, oh, I wish I could do this. Well, anybody can, right? It's just a matter of focus and a few other things. So I'm curious, what got you to move off of dreaming about it and actually doing it?
I'll say this. So single family, multifamily, 2 different phases in my life.
Yep.
I followed 2 similar trails.
Yep.
And I'm seeing exponential results.
Right.
So for me, I realized, I can do something different. I can diversify. And still work the 9 to 5, right? Because hey, I love procurement, right? Anyway, I joined the ecosystem. Joined the ecosystem, and I paid a large cost for it. And I was unwavered at the fact that I spent $40,000 to get into an education system to get me a mentor to help me realize successful.
Right.
I'm thinking, the econ in me again, right? So like I get this input, I'm going to get an output that should be favorable if I follow the tools and follow what I'm, do what they tell me to do.
Absolutely.
Did that in single family, got to the point where it's, I'm working, I'm teaching, and I'm still build up a business of $25,000 a month of cash flow, because in the market I was investing in,
I
was buying them cash.
Right.
I wasn't leveraging notes, from that standpoint. So I had a well-oiled machine that was working for me.
Yep.
Thinking back then, single family is just like, oh man, multifamily is out of my league. It's just like,
Right.
Didn't know about syndication. Didn't know about partnerships.
Right.
Lo and behold, here comes 2022. Light bulb goes off. I joined the ecosystem. I joined a mentoring program. I
Yep.
got a mentor. I joined the mastermind, and here we are. Here we are. GP opportunity before the end of the year, and I really started running in May.
Wow.
Started running in May.
So
Started
in
running,
roughly 7 months, you're already
7 months.
GPing a deal. Wow, that's really good, man.
So
Good for
taking
you.
action, proximity,
Yep.
knowing your conviction, that is key too.
Yep.
You know, we afforded my wife to retire in 2022. We went to a mastermind event with Jesse Itzler.
Yeah, he's amazing. Absolutely
Changed her
amazing.
life.
Yeah.
Changed her life. She's all in. All in. She's retired. She's helping to push the funnel for us to grow this to where we need to be.
Awesome.
She's retired and I'm next. So mindset, you got to get the mindset, which
Absolutely.
is key. And it took 7 months, man. I mean, 7 months to be in almost 2,200 doors, GP opportunity, and there's more opportunity to come. I feel like I want to run through a wall because I'm motivated. My aha moment has came, like I'm teaching my class. And man, the sky is the limit, man. So
and
I'm
you're
fired
obviously
up.
clear on your why, right?
Yeah. And and I got an 8-year-old. So you kind of see the art in the back.
Yep.
This is what I have in my house.
Yep.
Monopoly type stuff. This is the stuff. So at the dinner table, right? Kids they listen to you what you're talking about, right?
Yes, they do. Even when they tell you they're not listening, they're listening.
They're listening. So we're talking about apartments. All right, we talk about apartments. We're talking about LP, GP. He knows, and he's 8.
Right.
So now he wants to be an LP before he's 9. I'm like, okay, we can help you get there, son.
Wow.
Working on getting him an LLC. Him as primary, dad is secondary.
Yeah.
Just when I go looking for properties, right? Because I'm in Western Pennsylvania, so we're typically going to Columbus, MSA,
Sure,
right?
sure.
Looking around for opportunities. He's coming with me, and he's wanting to come with me for the long road trips.
That's
so
awesome.
I'm fired up that he's fired up, right? So,
right.
One thing I want to market is, man, look, this kid's 8. He owns a few doors.
Right.
If my son could do it, you can do it for your son too. So,
right.
I mean, that's just the excitement. My light bulb went off. And man, fired up. And getting the ecosystem, getting a mentor, and at any cost. So, you go to seminars, right? And folks say, it costs this much. My thinking is, you know what? It's an economic investment in myself. And if you don't take the time to invest in yourself, no one else will.
100% agree with that. And, the thing is that hiring a coach or a mentor, what it does, not only is it a force multiplier in terms of it helps you with, because then their network becomes your network, right? But it's also, they allow you, they enable you, they empower you to skip over all the mistakes they made over the first, 3, 5, 10 years of their lives, their experience. And so you jump right in and, I can't tell you how many I can tell you is, 4 or 5 people that over the years, would throw an arm around me, and some of them were unpaid. And one of them I've paid quite a bit to, and every penny was worth it. They'd come in and they'd say, look, here are the 19 ways you're screwing up, and it's okay. All of them are fixable. Here's how you fix them. Right. And then you go, oh, okay. Like dawns on Marblehead, and you go, okay, I'm never making those mistakes again. And now I'm exponentially, you're exponentially jumping forward. Right. Yeah. So, that we're in the math business, and that, our primary job is to be marketing both to investors and to brokers and also building owners. Right. I mean, these are things that, a lot of people that I run into, and it sounds like you as well, I can't tell you how many people are like, man, I just got to get my logo right. Like, your logo doesn't matter. Yeah. The fact is that what you got to do is throw yourself into the rooms where people are. You mentioned, proximity is power, right?
Yeah.
And that couldn't be more true. You've got to go shake hands. You got to go make friends with people. You got to make them aware of who you are and what you do. And invariably, you're going to meet people who are going to take a liking to you, or in my case, take pity on you and help you, right? And
absolutely,
and it's probably both, right? But yeah, I mean, you're spot on, Melvin. You can't get there alone. This is a team sport. There's no way around it.
It is absolutely,
yeah. So let me ask you, in terms of advice and mentorship, right? I mean, you and I have both probably different, and I'm going to pick your brain on who you work with, but we'll do that. We'll do that later. In terms of advice, what's the best advice you've ever gotten relative to the real estate world or just life in general? And I'm curious who gave it to you.
My single family mentor, his name is Mike Big Lane. So
Okay.
he's on the title company. He's done a lot of transactions over the years.
Yep.
He was the one who, when I first really ramped up, he kind of came, we met in the market together, which is Western PA, even though we both lived in different markets.
Yeah.
And we devised a strategy.
Yeah.
And it's been exponentially ever since. So it's like, know your numbers, know your market, due diligence.
Right.
It's key. It's kind of 3 factors that he kind of threw out to me.
Yeah.
So I've always been kind of keen on, trying my best, specifically multifamily, right? It's a little different, right? When you deal with the single family world, trying to understand the numbers specifically, right? Understand some of the trends behind those and being able to kind of help articulate, kind of know what's coming.
Right.
Economic cycles are always cyclical, right? And it goes through phases, right? You go all the way back last 100 years, it kind of shows you it trends. It goes up and it goes down. So, and we're dealing with bumps in the road today. So.
Right. Yeah. So true. So true. And but you mentioned the arithmetic, right? I wrote an article about this a while ago. I called him Frank the Flipper. It's a gentleman that I met, and I was buying an old house off of him, and he was an active flipper, and he bought too many, and he's like, this one's just sitting on the wayside waiting for me to get to it, and I'm not going to get to it, so I'm going to sell it. So I met him through a local networking group, and he's like, I got a house, I'll sell it to you. And so I came in and I fell in love. And he goes, no, we're not in the love business, we are in the arithmetic business. I'm like, yes sir, I understand. And he basically chastised me on the front stoop of that house for the better part of 15 minutes because I was like, oh my God, I love this, we can do this. And he goes, you're never going to live here, right? You're not rehabbing this house to impress your wife. You're rehabbing this house so that you can sell it to a nice family who's going to love it, and they may improve it beyond and make it their own, and that's fine. But you are in the arithmetic business. And I remember him shaking his finger at me. I'm like, yes sir, I understand. Okay, thank you.
You can fall in love once you get the final proceeds check. How about that?
Yeah, I fell in love with the check. I'm not going to lie there.
That's what
but yeah, don't fall in love with the granite and the cabinets, because those don't matter, right?
No.
Just rehab an honest house and sell it to a nice family. That's it.
And keep it consistent too. So there's a level of consistency. There's a paint scheme. Doing this for a while, it's just like, I know what I need to get, etc. Keep it consistent. I know the look. The look of my renovations are typically the same. And now they are, I have a target number. It's not like I'm trying to do 12, 15 of these a year. Nah. I know the areas now because I know my market. There's only a certain few. I want to keep my local contractors who kind of does that type work for me happy. And we kind of keep it moving from that standpoint.
Yeah, absolutely. Yeah. I mean, every single one of the houses that or apartment buildings that we have purchased and rehabbed, they all have white shaker cabinets. They all have white granite or gray granite. They have, Benjamin Moore paper white, which is an off-white gray. They have, and so on and so forth. We use the same toilets. We use the same lighting fixtures everywhere, right?
Consistency is key.
Yeah. Because if something breaks, we don't have to go figure out what's there. We know, right?
Yeah.
This fixture, this sink faucet breaks. I know exactly where to go in Home Depot to get it. It's the same tray I go to, or one of my guys goes to every week for all the other ones we're doing, right? They're exactly the same. And in most cases, we have a couple of them in the basement ready to go because stuff breaks, and that's fine.
Yeah.
Right.
Yeah. Easy pull, turn, and
absolutely
back to business.
So let me ask you, I mean, obviously you're really accomplished 2,100 doors. Oh my goodness.
Yeah, I mean,
that's impressive. So with regard to how you take in information, a lot of people read books, a lot of people listen to books, podcasts, YouTube videos, whatever. I'm curious about like what you're paying attention to and how do you consume information to kind of sharpen your saw, so to speak.
Stay with us. We'll be right back.
A motivated seller just filled out your web form. If you call back within 5 minutes, you're nearly 4 times more likely to get that seller appointment. But delay your follow-up by even just 10 minutes? Forget it. You're toast. Ella Vista Connect calls that lead back in 60 seconds, qualifies them, and schedules your meeting. Find out how much slow follow-up is costing you. Free calculator at elavista.com/underground.
Well, New Year's resolution for me. So I'm a runner. I run in my neighborhood. It's pretty hilly.
Yeah.
What I do, I have a specific jacket that I put on, and there's a little couch here. So I always grab my cell phone, listen to a podcast when I'm on my walk for the day.
Yeah.
So, and I do that, and I just listen to different type podcasts just to kind of, experts in a space, right? I don't claim to know it all, but I love listening to the podcasts when I'm going on my run and my journey from that standpoint. I mean, there's a lot of syndicators in our space that put out some darn good content on LinkedIn.
Absolutely.
Superior content.
Absolutely.
I mean, killer content. So I love going in, reading through what some of other fellow syndicators are putting out. Also, I'm part of an ecosystem as well. We kind of have, I'm starting to try to listen to a webinar almost nightly, depending on the time. I like to kind of stick to a ritual, right? Got a son, make sure his homework, sometimes he has his he has his things and his activities as well. So if I can listen to a podcast or a webinar in the evening, I try to do that at least 4 days a week as well.
Oh, so that's impressive.
Yeah. So changing my mindset, man, in terms of trying to listen to a podcast at least 5 out of 7 days a week.
Okay.
And trying to plug into a webinar at least 3 to 5 days a week. I can't do it all. But, and now we've gotten to the point now where there's so much different webinars and stuff going on. Hey, dear, my wife, you listen to one, I'll listen to the other one. Let's share.
Right, and we'll educate each other, right?
Yeah. So, hey, here's what did you learn? What did you gain from it? And we kind of share that. And that's the kind of intel that's going on now. So it's infectious, which is cool.
Yeah.
The sun's picking up on it. And man, there's never been a time, that kind of infectious activity that's favorable, and everybody's fired up, man. So it's just kind of crazy right now. And my son told me he wanted to be an LP. Now, I had to educate him on GP versus LP in his terms, and he kind of understands it. So he wants to be the first of everything, right? So he can tell the class and things of that nature. But maybe they'll bring some other passive investors.
Hey, you never know, right?
So, yeah.
And light a fire in somebody else, right?
Yeah. Hey, that's all we can do, right? It's
that's a
favorable thing.
So what, who are you listening to specifically in terms of podcasts, for instance?
Listening to Rob Khalif.
Yep.
My mentor is Brad Sumrock. I'm part of the Sumrock ecosystem.
Yeah.
So, always listen, right? The educational ecosystem there is fantastic.
Yep.
Part of the mastermind as well.
Yeah.
There are other syndicators who are in my ecosystem that I love listening to as well. There's a gentleman out of the Maryland, DC area, Brandon. He operates the Capital Stack.
Yep.
So, so love listening to different type podcasts as well, and different clips on LinkedIn. That's kind of processing through. Yep. Those are pretty good segments too. That kind of, we all scroll. We have a separate aspirations of scrolling throughout the day, right? In terms of social media, I'm a culprit too, but I want to be scrolling through stuff that matters and means well.
Absolutely. Yeah. I've gone to great lengths to curate my Twitter, LinkedIn, and Facebook feeds so that I get information. I mean, I think it's great that my niece got an A in something, and that's wonderful. But what I really want to know is what Brad's talking about, or what Rod Cleef's talking about, or, who Charles Dobbin's interviewing, who's my mentor, this week on his podcast. And, it's, you learn from, as Tony Robbins says, success leaves breadcrumbs, right? It leaves clues. And, if I can get with people who are where I'm trying to get, our goal is 1,000 units managed in-house by the end of 2025. So, and we're getting there, but we're not there yet. And we have a lot of work to do, but that's okay. The journey's fun. So, but the, to be able to listen to these guys and gals who have been there, done that is really, it's inspiring, and it's also really educational. Right.
Absolutely.
So, there's a guy in your backyard, actually, Brian Briscoe, who I've just discovered. He's based in Ohio, and his podcast, I met him on a LinkedIn challenge like a month ago, and I found out that he had a podcast, and I started listening to it, and I'm consuming it as fast as humanly possible. It's phenomenal. So, and he talks about the Ohio market a lot. So that's
funny. I met Brian on Yona Weiss's podcast.
I know Yona well. Yeah, sure.
And got a chance to meet Brian face to face at Raise Fest in Louisville. So he talked about proximity is power.
Yeah.
I mean, he gave a market layout assessment that was it was pretty killer.
I was actually supposed to be at Raise Fest, and I had a small medical issue and wasn't able to travel, but I'm definitely going to be there next year because I really enjoyed Hunter Thompson's book.
Phenomenal book.
Yeah, it's an outstanding book.
Yeah.
The other one that I really liked was, I was just talking about this with a friend of mine. It was Matt Faircloth's capital raise book, which was excellent as well.
Okay.
So yeah, Matt's out of, I want to say South Jersey South Jersey, I think. He's like in the Pennsylvania area. Okay. But his book, he's a Bigger Pockets author, and it's outstanding.
Gotcha.
So,
okay. Thank you.
So let me ask you, in terms of when you're not saving the world and creating wealth through multifamily and running your single family portfolio, what do you like to do? What's fun? What do you do for fun?
You know what, Chase, after my 8-year-old, man, I have a son, Melvin III, and he's legacy for me. So making sure he's taken care of, participating in his sports, shoveling him around either soccer, flag football. He's going to take on lacrosse.
Right.
So that's a new journey. So looking forward to that with him as well.
So the dude can run. If he's playing lacrosse, he can fly, and soccer, right?
It's kind of hard to keep up, man. Even though I'm a little older now, but he's always running and jumping. So it's a constant thing every day. But it's fun, man. It's fun, and as long as I can keep jogging, I'm gonna keep chasing him. So
there you go.
That's how that goes. So,
somebody asked me what my hobbies were, and I'm like, it was my uncle. Actually, my uncle's like, what do you do for hobbies? And he doesn't have kids, and I was like, I chase your nieces around. That's what I do. That's it, right? I go to soccer games, I go to softball games, I go to swim-in meets, and whatever else they're doing.
Yeah. Right. So man, it's all about him. Yeah, he just got one, so. It's all about him and doing Absolutely. That. And I like sports as well. So me being from Louisiana, you see, I follow my Saints, still season ticket holder, and Saints and Pelicans. That's who I root. That's who I root for. So yeah.
Well, good. Hopefully, the Pels actually look like they're gonna make some noise in the playoffs. So we'll see. Fingers crossed.
We'll see.
Yeah.
I know, right?
Right, Zion, got to stay healthy.
Yeah. You got to stay healthy. Yep.
That kid's a man. Oh my God, he's an
boy. Yeah, he's a man.
So, all right. Well, hey, Melvin, I've really enjoyed this conversation, and
man.
Procurement Professionals Unite in Real Estate. Thank you very much for your time today. Hey, if people want to get in touch with you or learn more about your business or your upcoming podcast, how would they get in touch with you? What's the best way?
Sure. Podcast is starting up in early March. Title of the podcast is Get Diversified. Pretty simple.
Yep.
Got a website as well, www.morelandequity.com. MORELAND equity.com.
Excellent.
And I can be reached as well. My name is Melvin, but they call me Merv. Merv at morelandequity.com.
All right. Well, if it's okay, I'll call you Merv then too.
You got it, buddy.
Right. Hey, it's a pleasure to meet you, and thank you so much for your time today and all your wisdom. I'm sure everybody out there has been picking up gold nuggets all the way through this episode. So thank you.
Hey, thank you. As an educator, I'm still learning.
Yeah,
we'll keep on.
We all are. Hey, we're all reading the same book. Just a couple of us are a few chapters ahead of other people, right?
All good, man.
That's it.
All good.
All right. Thank you, Melvin Landry. Thank you.
Thank you, man. Appreciate it.
This has been the Real Estate Underground podcast, a Clark Street Capital presentation. Thanks for joining us. If you're enjoying the show, please remember to subscribe and share it with your friends. If you'd like to learn more about Clark Street Capital and our upcoming projects, please join our investor club at clarkst.com/join. Until next time, happy investing.
This has been the Real Estate Underground. Don't forget to subscribe. It helps us grow. Until next time, Undergrounders, remember your real estate journey begins with a simple step forward. Now get to it. Bye for now.